Hey everyone, so today I wanted to make a video talking about how we actually use all three of the universal truths to take trades. So if you saw the other videos that I made, you know that there are three universal truths of price action using the strat, and those three truths answer the three big questions that every trader, regardless of what you're trading or how you're trading, has to answer to. So those three questions are: what direction is price moving in? Where can we expect price to go to? And then where do I enter and exit? And I touched on that in the other videos, so we know that the time frame continuity principle is how you determine which direction price is going in, because it says that uh, price must trade in the direction of the most twos, and twos going three across four more time frames. So we use that to determine what direction we're going in. Where is price going to? We use the broadening formation because we know that in a broadening formation, you're targeting the previous pivot highs or lows when price is trading back through a previous range. And then how do you get in and out? And that's given to us by the actionable signals that we get from knowing that there's only three types of candles that are in existence. That is these combos here. So using those, that's how we take trades. I won't go super in depth on trades. That's going to be at a further dated video. But for today, we're just kind of scraping the surface on how we sort of put it all together. So in this case, KO is a chart that I've talked about in previous videos. Um, we started talking about it back here when we started getting this broadening formation here. And we were just discussing sort of the broad information itself and how you would attack this based on that. So now we are at the point where this is broadened so much that we have this gap up into this new range. Now our broad information has gotten so big that we now have this big of a range, almost $10, I think. Sorry, $8, 10%. So given our broad information, what we know is that when price starts reversing back up into previous range, now price is going to try and go back up here. Because again, before, when it all started over here, when price reversed here, we were targeting here to expand that. And then when it reversed back down again, we were going here. And so it kept expanding. And then what happened was we made that lower low, and instead of continuing lower, price ended up inevitably reversing back through, and where we target was there. That was all-time highs over here. So now it's got some selling after taking out that high, and then we took out down here. So now it's a much bigger range. And what we have set up on the week is this 2-2 reversal back up to make the all-time high again. So the way that we would trade this, for one thing, is understanding what our broad information looks like, how it would get up there, which is this reversal, the 2-2, and then understanding how do we actually go after that. So if you were just using the 2-2 reversal combo, that would say above the failed two down or just the two downs high, you target the previous candle's high, which is the two previous to that. So above here, you target here, which is conveniently our broad information target. And it's also all-time highs again. So you have that. We also notice that our time frames are all green above this purple line. And so again, standard analysis is done. We use 4 time frames, no matter how or what we're trading. So it's going to be the month, the week, the day, and the hour. Those are our 4 usual time frames that we're using. So given that our month is green, given that our week is green, our day is currently red, but yesterday was green. And then our hourlies were green, reversal, and then green again. How would we have sort of gotten in on this? So obviously today we're inside bar and red, so it's no longer going towards this target. But yesterday we opened up the new week, and if you can imagine, from this candle up to here makes our big failed 2 down weekly candle. So above this 71.85 level, we are trying to go to here. And so the way that we actually play this, again, we've identified the broadening formation. We've identified that we have full time frame continuity to the upside when we're above this level here and also above our weekly trigger. We then look at the actionable signals. So again, we're sort of just looking for conditions to be met and basically saying when we have a broadening formation that we're working towards, we have full time frame continuity heading in that direction. How do we get in and out then? Because we've met two conditions of which direction is price moving and where are we going to, and we know for certain that price has to be moving in that direction given our time frame continuity principle. And then of course we know where price is trying to go because of our broadening information. So once we have that, it's just a matter of how do we get in and out. So using our standard analysis here, month, week, day, hour, the hours are smaller time frame in that situation. So what we would do is one thing, you can just trade the weekly signal that you've got, like any other candle, long above the previous week's high to target up there. The issue is just that with risk management, you may have to risk a lot if you're trading just on the week. So what we do is we will take lower time frame signals to confirm what's happening with our week or whatever our main signals time frame is. In this case, it's our week. So you can see we open up on Monday, we went lower, then came back up, made the outside hour, and then got a slight corrective move back in, and then reversal back up after that. So what's important here is that we know that we're making a smaller broadening formation given the scenario 3 hour. And then what you're seeing is we're above the week's trigger and you get a reversal back down. So if this hourly broadening formation is going to work, price is going to stay under our hourly reversal trigger. And so given that it didn't, it went back above and it failed the 2 down hour. And then you set up the 2-2 back to the upside. This is actually where if we were just trading the, month, week, day, hour basis, you would actually take it there. And so then if you're trading for the whole week's signal, what you're then doing is risking the single hour's worth of range. Or like, I'll make a whole separate video on the risk management, but like some strat people will put their stop losses here at the bottom of whatever that current candle is. That's how I do it. Some people put it at the candle open. Some people say like, a couple pennies underneath your trigger. If it doesn't immediately go, then they want out. Some people go all the way at the bottom of whatever the candle is. Because that fundamentally changes what the candle is, and then it's no longer a 2 up, it's a 3. So, there's a bunch of different ways to do it, and I'll make a whole video on that. But for now, all that's really important is that you know, you're only risking 1 hour's worth of range to catch the whole weekly signal. So it would sort of look like this. And of course, we know now that it's no longer working, but at one point when all those conditions were met, given you have the 2 up hour, 2 up hour, 2 up hour, as long as that's still occurring and you don't have a reversal against it, then you're still good. So this trade would have been decent if we took this yesterday. But that's sort of how it's done. You are looking at bigger time frames to find an actionable signal that reconfirms your time frame continuity, um, supports the broadening formation, and then you're just taking stabs at it from a lower time frame because again, you don't want to risk the whole week's worth of range. It's a lot of range there. Even if you were just doing the weekly open or the weekly low for the current week after triggering the signal up. So I'm not sure if I've talked about this in other videos or not, but there is the concept of it's called the take action window. And it is essentially just saying that it's visualizing what actionable signals tell us. So above this week's high, we're trying to target up there. So anywhere in this window of range and time, you can try and take longs. So anywhere within there, anywhere that you see a long signal, you can try and take that and reconfirm what's happening with the week. And in this case, the day was 2 up as well. So, you know, all of your time frames are higher high and green at that point. And then again, once your hour confirms that too, since the hour is the smallest time frame in that sequence, the day, week, month, 60. Once that happens, again, time frame continuity says that there must be buying occurring until you get the reversal. So until right here, once price goes back under, it makes the 3. And then that's evidenced by the 3-2 reversal back down. So even if your stop was a little bit below there once the 3-2 actually kicked in force. Either way, from here to there, it's not too much range, but that is still how we would take the trade. Um, Another thing to note, so a lot of what we look for is, again, reliant on broadening formations because we know that broadening formations are always trying to form, whether they are actually broadening currently, whether they are expanding or getting stuck and then restarting the whole process. It's always occurring. So the it kind of ties into why we wait for lower time frames to reconfirm what's happening with the higher ones. Because logically, people that are buying here, you're stopping out some people by taking out previous lows because we know that people put their stop losses at previous lows and, obvious places. So you're stopping some people out, and then longs here are buying it up for the day. And then once you get above the previous week high, that's some people's targets. So some people will take profit once that happens, which is why we get this phenomenon of like a smaller time frame broadening formation. Um, it's called TTO, triangle they out. It's just saying there's corrective activity after larger time frame signals go in force or while they're working even. So again, if we looked at a lower time frame, you would see kind of what I'm talking about here. Here's your broadening formation. And then what you'll notice is that it gets the reversal to come back in, but then gets back out of that. And so above here, which was the previous broadening formation target, once it's above that, your broadening formation is now expanding instead of, retracing and, broadening. It's expanding and making new range, and then inevitably makes a new broadening formation somewhere else. Same thing, if it were to come back in here and then instead of making the new lower low, it would just get stuck in there. And then again, what you would have is just a reset of the whole process. So say price gets in here, say it fails, and then it just gets stuck. And then inevitably, it'll make the new broadening formation, regardless of how it looks. You can see how that would sort of be with this. Again, it just sort of restarts within the previous range. That is something I talked about in the broadening formation video, just with the life of them and how they operate. Again, they're either working, they are expanding, or they're getting stuck and restarting. So with that, again, you get higher time frame signal goes in force. You get slight corrective move, and then that first reversal back up that reconfirms the week while the week is still in force and technically working because it's above its trigger and hasn't hit its target. The first reversal back up to confirm all of that is how we would get in. And some people will even go lower and take it on smaller time frames if they so choose. The hourly was clean here, but let's say, for example, you take this 15-minute hammer this is your first corrective bar because it's your first reversal on like the 15 after triggering the week. You get that, and let's say you long here instead. You know, you can see how that kind of works. You do go higher on the day, but then you get the reversal right around where you got in at. So in that case, you either have to stop out or put your stop back down here by like the weekly trigger once the week is no longer working. So there's a chance of that occurring. And then right here again, 212 back up. Maybe you re-enter here, and then maybe you actually get stopped out once this goes 2-2 back down. And then we go 3-2 up and 2-1-2 up, and maybe you get back in here. So with the strat, if you're going to take smaller time frames, which is usually the recommended way to do it because of the risk management part of the strat, what's going to happen is you may go break even or lose some of your trades. But what we try to do is limit those losses as much as possible and then let the winners just win. Because, and as long as your conditions are still met, in this case above that weekly trigger and time frame continuity still fully to the upside and no reversals back down, um, it's still good. You can still keep re-entering and re-entering until you no longer have all of the evidence. So in this case, that was right around here, I believe, once the next hour went 3, or was it the day before? Yeah, it was actually over here once he took out this level in this bar. So even if you got in here, and you still caught most of that, or even stopped out here, or whatever it may be, the goal is just that you're taking as many stabs at these as you can, as long as you have all the evidence in your favor, and you're just risking a very small amount to have your winners be bigger winners. And then of course we try and average up in our positions when possible, because if your position is winning and you're in a winning trade and you've identified a winning scenario, you want to reinforce that versus not reinforcing a losing trade where the trade starts going against you. You don't want to double down on it just because you don't want to be wrong, or if it's going to somehow return to working again, you want to make back all that money plus more. So it's just backwards thinking, but logically this is how we do it. It's identify an actionable signal using full time frame continuity and a broadening formation, figure out when all those conditions are going to be met, and then once they start working, find a lower time frame actionable signal in. Again, using the combo sheet here. Any of these that are long to get in, because the ideal entries are just corrective activity followed by a reversal back into what time frame continuity says and what our bigger actionable signal is saying.